Breaking news for the XRP community. U.S. banks are now onboarding capability to leverage instant settlement here inside the United States. And I'm going to show you a couple of key catalysts that we can anticipate in the calendar year of 2025, leading me to believe we are entering an alt season that we haven't seen since 2017. Hello and welcome back to another episode of Good Evening Crypto, your favorite crypto news related channel. Just a quick reminder, if you enjoy this type of content, be sure to smash that like button and subscribe to the brand new Good Evening Crypto channel. Now, just to quickly address the XRP price chart at the beginning of the episode, amidst all this global chaos, we are still maintaining $2 in value, trading at about $2.02. And as I'm doing a macro analysis on the 1 month XRP price chart, we are observing over 10 years of chart data right here. So you cannot get a more valid timeline than this. The $2 range seems to be the most significant price we have ever seen for the XRP community. And there's several reasons for this. People often talk about the price run that we experienced in 2017, going from a fraction of a penny to just under $4 in only 240 days. That is 70,000% gains in a single calendar year. Well, we only had monthly closures above $1.90. Going all the way back to the 2021 bull run just 4 years ago, we never had a daily closure above $1.96. So we never closed above $2 for a single moment during the 2021 bull run. Now, what did we witness after the election of Donald Trump? We saw the XRP price chart go from 51 cents in value north of $3.50 on some exchanges. And we even had some monthly closures well above $3 at about $3.04 here. Why is this important for our listeners to understand? Not only did we never have a daily closure before the calendar year of 2025 above $3, we never had a monthly closure above $2 for the XRP price chart in the history of this asset. And now we are comfortably trading between the all-time high that wicked up here in 2017 and where the market bottomed out and found a consistent buying range of $2. I believe that XRP is severely undervalued. And it's one of the reasons that I think fair value for this asset, even right now, is well above $10 on the XRP price chart. So listeners, I would love to hear, do you believe XRP reaches $10 in the calendar year of 2025? One's underneath the video for yes, two's if you think that's not going to happen. But here's the reality. With 19 different XRP ETFs, stablecoins coming from all different networks, we have a market structure bill, and we finally have the largest companies on the planet buying this asset and adding it to their balance sheets. I think there is more reason than ever to be optimistic on XRP. Now, let's break down why this is important for banking. This is an update from the Federal Reserve's website outlining exactly how ISO migration is already in the process of happening. And here's the direct statement. For the past several years, the Federal Reserve has worked with industry to prepare for the implementation of ISO 20022, a messaging format for the Fedwire Funds Service. The industry has made significant progress and accomplished many milestones over the years. The FRFS has decided to reschedule the Fedwire Funds Service to be ISO fully compliant by July 14th, 2025. This will provide additional time for customers and vendors who are not ready to prepare for the transition to an ISO 20022 format. The Fedwire Funds Service will remain on the current messaging format, but once July 14th arrives, the Federal Reserve will make an official announcement of its go or no-go decision on July 14th, then June 27th. Now, why are these two dates so important? Well, first of all, June 27th is only 4 days away. And as you can tell from this document, anywhere between June 27th and July 14th, the Fedwire Funds Service, they will make an official announcement confirming United States banks are about to be ISO compliant. Now, why is this important for our listeners? Coins like XRP, XLM, XDC, Algorand, and IOTA are aligned with the ISO 20022 standards due to their focus on interoperability and financial messaging standards. They aim to support efficient and compliant cross-border transactions, and these tokens may offer long-term potential due to their focus on institutional adoption and integration with current financial systems. This is what we've been promoting on both Good Morning Crypto and Good Evening Crypto. The potential for some of these technologies is limitless. And as this asset class is currently sitting at only $3.5 trillion in total value, these are settlement systems that are doing $5-6 trillion every single day. And that total volume will be moving on some of our favorite crypto projects. What this means, for example, is if a product like XRP were to absorb 10% of Swift's total volume, 10% of $5 trillion is $500 billion a day, that is now how much value would be transferred on the XRP ledger every single day. Now let's break this down even further and explain what could happen after the adoption of ISO protocols. Here it is.
If they determine on June 27th that everything is in place and ready, they would call it a go on that same day. And on July 14th, all systems will go live on the same day. Because like I said in the beginning, this will be a big bang migration. And if you read at the end, it also says that they will not be providing translation services. This means they will not be using or providing support for the old system on that date. Once the new ISO 20022 goes live, the old MT language will not be supported at all on the Fedwire system.
And this highlights the narrative that we've often speculated on for a flip of the switch moment for banking. When banks start having instant settlement capabilities, anybody who takes 3 to 4 days to process a transaction will be left in the past. Just a quick reminder, guys, if you enjoy this type of content, be sure to subscribe and smash that like button as we provide an update every single day, 5:30 p.m. Eastern. So now that we understand we are on the precipice of hundreds of billions, if not trillions of dollars worth of daily volume being onboarded into many of our favorite blockchains, I think the logical question we have to ask ourselves is, how undervalued is this asset class today? Well, looking at the XRP price chart, we are currently trading in ranges that we were dating all the way back in 2017. If you think about where this market was 8-9 years ago, not only was there no ETF products, this was a completely speculative market with no institutions even ready to discuss the topic. Now we're sitting here in 2025 trading at the same market value, yet XRP is not only on the precipice of being fully regulated, it's on the precipice of being adopted by both Wall Street and United States banks, if not banks all around the world. And once these systems begin migrating all of their products onto blockchain, not only is that money here for the short term, that money stays on the ledger, benefiting crypto investors for years to come. Here's a short video of another XRP community member, Jake Claver, explaining how when products like Swift and Bank of America onboard their business models to the XRP ledger, that money is there to stay for years to come.
XRP, I start to see it rise. My account's going Should I liquidate? Will it come back down once it's all stabilized, or will it remain that high and higher?
It'll remain that high and higher. And the reason for that is there'll be enough liquidity in it, like we talked about before, for these counterparties that settle transactions to do that all day long, but use XRP. So Swift settles $5 trillion a day. If that volume moves onto the network when XRP is $100, it'll stay there. If they start settling the back end of the stock market, which is $5 to $6 trillion a day, now we have more demand, and it's going to move to another price and stay there because it's got sustained demand and volume from the settlement of those networks and those markets.
So whether it's the upgrading of our banking system, Wall Street products, treasuries, stocks, bonds, all of these different financial assets are going to be onboarded into blockchain. And that money isn't transitory. That money is here to stay. And it's not just community members like Jake Claver who are predicting that the XRP ledger will overcome many of the problems in banking. Here's a short video from Ripple's CEO, Brad Garlinghouse, talking about how Ripple and the XRP ledger are on the precipice of revolutionizing banking.
Our view in the future is you don't have to have this pre-funding, and instead you can use a digital asset to have global liquidity on demand. Now, we build upon a tech stack, an open source technology called XRP. XRP originally was built by some engineers who had seen some of the flaws of Bitcoin and the challenges of scalability around Bitcoin. Where Bitcoin today, per transaction basis, it's rather slow and rather expensive. XRP is very, very fast, about 1,000 times faster per transaction and 1,000 times cheaper per transaction. The other dynamic, of course, of correspondent banking is some of the more quote unquote exotic currencies, exotic corridors have been left to kind of stand on their own. And the liquidity in digital assets could be applied to actually make that much more democratized and a level playing field. Ripple's vision from the beginning really has been to apply these technologies in the same way that TCP/IP and HTTP are the technologies underpinning the Internet of Information. These blockchain technologies will be the underpinnings of an Internet of Value, where we have connected devices, we have connected information that will allow payments to flow.
So these are the problems that were being discussed nearly 10 years ago when it comes to correspondent banking. And when you're building a global economy, you cannot charge users 3 to 5% in order to exchange money cross-border. So as Brad Garlinghouse clearly outlines, not only is the United States in the process of upgrading to modern settlement capabilities, this is necessary in order to facilitate a global economy. And now that we know that blockchain is going to play an essential role in the global economy that's being formed, it's people like RAOUL that are predicting this asset class could go from $3.5 trillion north of $100 trillion in the next 8 years. And I've highlighted that maybe some of these estimates could be much higher. As we can tell today, the Treasury Secretary Scott Bessent is predicting $3.7 trillion worth of stablecoins by the year 2030 alone. Well, today, stablecoins consist of about 8% of the total market cap of crypto, leading me to believe we could be looking at a $30 trillion crypto market by the year 2030. So live chat, I would love to hear ones if you think we get to $30 trillion by the year 2030. Twos in chat if you think the total market cap is below that number. But I think we have a very rational and logical explanation as to why, as all the world's global markets are now migrating onto blockchain. Let's hear Raoul Pal discuss how this market's set to go from $3.5 trillion north of $100 trillion.
And the mandate across the entire region, from Saudi to Abu Dhabi to Dubai to Bahrain to Qatar, is AI and blockchain. And not just using Bitcoin as a reserve asset, but also building the entire government infrastructure on blockchain, driving licenses, property deeds, you know, the whole bloody lot. So it's like, it's fascinating to see. And then a lot of people say to me, well, if all of this money's coming in from the sovereigns, that may produce an outside return. And I'm thinking, well, if we're going from 3 trillion to 100 trillion, which is my estimate by just extrapolating out the trend rate of growth, you need larger players each time because the market cap is bigger, right? There's no way you're going to get to 15 trillion this cycle unless you've got bigger players. So it's kind of, I don't think it's what people think it is. I think it's just a function of the size of the market. The bigger it becomes, the more that those people are involved, and the more blockchain technology gets used, the more it uses the alts for infrastructure rails, for new forms of compute and storage and all the other things that are coming. So I just thought it was interesting because everyone's like, oh my God, it's a super cycle because of this. I'm starting to err towards, well, we've talked about this before, a longer cycle, just because the business cycle is still below 50. So generally it takes a while to climb up. And then we use the GMI Financial Conditions Index, and that has a 9-month lead. And with the dollar breaking down even today, it's starting to suggest that this may go even into Q2 2026. So it's like the whole cycle got shifted because rates didn't get adjusted and the dollar was sideways for a period of time. So it feels that potentially there is a chance, and again, there's no guarantees in this world, that we're more like 2020 than we are in 2021. Or it's it's spookily similar to 2017.
And with Raoul Pal admitting that this market could be experiencing growth like we have never seen before, it's players like BlackRock, Grayscale, and Franklin Templeton. These are the companies that are going to be most influential during the evolution of the digital asset class. Live chat, I would love to hear, do you believe we get an alt season in the calendar year of 2025? Ones for yes, twos for no, but this is where we are today. We are on the precipice of the largest companies on the planet beginning to use blockchain products, not just to speculate on price, but for the actual utility behind these technologies, whether it's instant settlement, tokenization of real world assets, or using these technologies to improve existing business models. It is products like XRP and THER that I believe are going to outperform other crypto assets in the calendar year of 2025. If you enjoyed this content, be sure to smash that like button and subscribe to the new Good Evening Crypto channel. We'll see you in the next one.